Good day, I'm Darmika. Will be presenting background of LNP Global Berhad, a leading integrated industrial packaging solutions provider in Malaysia, operating in Malaysia and Vietnam. Listed on the AIS market of Bursa Malaysia on January 3, 2023. It is transitioned to the main market on February 2, 2024. The group focuses on optimizing supply chain management with cost-effective packaging, storage, and logistics solutions. Their vision is to create solutions that provide and move valuable items, while their mission emphasizes innovative product design to minimize waste and extend product life cycles.
Hi and Assalamualaikum. My name is DURRANI MUNIRAH binti Muhammad ZAKI, matrix number 311653. I am going to talk about the background of Luxchem Corporation Berhad. Luxchem is a prominent Malaysian company specializing in the trading and distribution of industrial chemical, as well as the manufacturing of unsaturated polyester resins and related products. Founded in 1984, Luxchem has established itself as a trusted name in the chemical industry, serving as a diverse range of sectors including rubber, plastics, coating, construction, and water treatment. Today, Luxchem stands as a leading player in the chemical industry, supported by a strong network of business partners, dedicated employees, and a commitment to continuous improvement.
Assalamualaikum warahmatullahi wabarakatuh. My name is NAJWA SOLEHAH binti TARMIZI. My metric number is 313148. And I will present Session 2 Financial Ratio for Luxchem Corporation Berhad. For the first one, we have liquidity ratio, where we have current ratio and quick ratio. For current ratio, Luxchem got 3.85, means that Luxchem has 3 ringgit 85 cents in current assets for every 1 ringgit of current liabilities. This indicates strong short-term liquidity, showing that the company can comfortably meet its short-term obligation. For quick ratio, Luxchem got 3.10, means that Luxchem company still has 3 ringgit 10 cents of liquid assets like cash and receivables for every 1 ringgit of current liability, even without selling its inventory. This shows strong liquidity as Luxchem can easily pay its short-term debts quickly if needed. The second is activity ratio, where we have total asset turnover and account receivable turnover. For total asset turnover, Luxchem's number is 1.02, means that for every 1 ringgit of assets, it can generate 1 ringgit 2 cents in sales in a year. A higher number means that the company is making good use of its resources. This means Luxchem uses its asset quite efficiently, though there's still room for improvement. For account receivable turnover, last year recorded an account receivable turnover of 6.11 times. This indicates customer paid their debts about 6 times a year, meaning it takes around 60 days to collect payments. This is acceptable for manufacturing and trading business, but faster collection would help improve cash flow. For the third one is profitability ratio, where we have profit margin on sales and return on common shareholders' equity. For profit margin on sales, last year recorded 0.0741. Since Luxchem operates in the manufacturing and chemical supply industry, a profit margin of 7.41% means that the company earns about 7 cents in profit for every ringgit of sales. This margin is considered reasonable for the industry and indicates that the company is managing its costs efficiently and maintaining a healthy level of profitability. For return on common shareholders' equity, Luxchem recorded 0.1075 or 10.75%. This indicates that for every 1 ringgit invested by common shareholders, the company generates 11 cents in net profit. This level of return is considered good and reflect efficient use of shareholders' funds in generating profit. For leverage ratios, we have debt to asset ratio and debt to equity ratio. For debt to asset ratio, last year recorded 0.2086 or 20.86%. This means that 20.86% of the company's total assets are financed through debt, while the remaining 79.14% are financed through equity. This indicates a low level of financial leverage, showing that last year relies more on its own capital rather than borrow funds to finance its assets. Such a ratio reflects strong financial positions and low financial risks for the company. For debt to equity ratio, last year recorded 0.13, which means that for every 1 ringgit of shareholders' equity, the company only has 13 cents of debt. This indicates that last year utilized minimal debt to finance its operations and relies primarily on its own capital. A low debt to equity ratio such as this reflects a strong and stable financial position as well as low financial risk.
Hi and Assalamualaikum everyone. My name is NURFARISHA SAFRA, matrix number 314188, and today I would like to present financial ratios for LNP Global Berhad. So first of all, we have liquidity ratios, which include current ratio and quick ratio. The formula for current ratio is current assets divided by current liabilities. The calculation will be 90,779,897 divided by 10,620,695 equals to 8.54. This means that LNP Global Berhad has RM 8.54 of current assets for every RM1 of current liabilities, which shows a very strong liquidity position, but also imply that some assets are not being efficiently utilized. Next, the formula for quick ratio is quick assets divided by current liabilities. The calculation would be 78,926,897 divided by 10,620,695 equals to 7.43. This means that even without relying on inventory, LNP Global Berhad is still able to comfortably meet its short-term liabilities. Secondly, for activity ratios, we have total asset turnover. The formula is net sales divided by average total asset. The calculation would be 133,569,988 divided by 143,510,569 equals to 0.9307. This means that LNP Global Berhad generates RM 0.93 in sales for every RM1 of assets and shows a moderate efficiency in using its asset. Next, the formula for account receivable turnover is net sales divided by average trade receivable. The calculation is 132,569,988 divided by 32,139,528 equals to 4.15. This means that the company collects its receivable about 4 times a year and indicate a moderate collection efficiency. For profitability ratios, firstly, we have profit margin on sales, and the formula is net income divided by net sales. The calculation is 11,099,171 divided by 133,569,988 equals to 8.30962. This means LNP earns RM 0.08 in profit for every RM1 of sales and shows that the company is moderately profitable. Secondly, the formula for return on common shareholder equity is net income minus preferred dividend divided by average common shareholder equity. So it will be 39,160,902 divided by 143,394,315 equals to 0.273099. This means that 27.31% of the company's assets are financed by debt, which means a low financial risk. So for leverage ratio, we have debt to asset ratio, and the formula is total liabilities divided by total asset. So the calculation will be 43,048,000 divided by 143,627,000 equals to 0.29972. This means that LNP maintains a healthy financial position with a manageable level of leverage, showing it relies more on shareholder equity than on borrowed funds. And lastly, the formula for debt to equity ratio is total debt divided by total shareholder equity. The calculation would be 30,263,159 divided by 104,275,000 equals to 0.290224. So this means that LNP use RM 0.29 of debt for every RM1 of shareholder equity, shows that the company has a very strong equity position.
Let's move on to the ratio comparison between Luxchem Corporation Berhad and LNP Global Berhad. Firstly, liquidity ratio of these two companies. Liquidity ratio. Luxchem has a current ratio of 3.85 to ratio 1 and a quick ratio of 3.1 to 1, showing strong liquidity and balanced use of assets. LNP Global's ratio are much higher, 8.54 ratio 1 and 8.44 ratio 1, indicating very strong liquidity but possible inefficiency in using current assets. Next will be activity ratios. Luxchem's total asset turnover of 1.02 times and accounts receivable turnover of 6.11 times shows efficient asset use and fast cash collection. LNP Global's 0.93 times and 4.15 times indicate slower asset utilization and slower receivable collection. Profitability ratios. Luxchem earns a profit margin of 7.4% and ROE of 10.75%, reflecting solid but conservative returns. LNP Global performs better with 8.3% profit margin and 27.31% ROE, showing higher efficiency and stronger returns. Lastly, our comparison will be leverage ratios. Luxem's debt to asset ratio is 20.86% and debt to equity of 0.13 reflect low financial risk and conservative financing. LNP Global's higher ratio, 30% higher, indicate moderate risk but the potential for greater returns. So here, I would like to conclude that Luxem is stable, efficient, and low risk, while LNP Global is more profitable but riskier with slower asset use and excess liquidity.
Next, I am going to talk about suggestion on how to improve liquidity ratios. For the current ratios on Luxchem Corporation Berhad, they must avoid letting resources sit idle. Secondly, they have to control inventory levels by reducing unnecessary inventory. The third one is make use of supplier credit effectively. For the LNP Global Berhad, they must use excess cash more efficiently. Secondly, improve account receivable collection management. And the last one is do short-term investment. For the quick ratio on Luxchem Corporation Berhad, firstly, they have to reinvest in business growth. Secondly, implement better working capital planning. And lastly is better coordination between finance and operations. For the quick ratios, for LNP Global Berhad, they must minimize excess cash. Secondly, they have to settle all short-term liabilities. And lastly, they have to improve sales. Next, suggestion on how to improve activity ratios. Total asset turnover on Luxchem Corporation Berhad, they firstly have to enhance capacity utilization. Secondly, they have to strengthen inventory control and grow sales through a wider product mix by promoting higher demand chemical products to increase revenue while operating with the same asset base. For the LNP Global Berhad, they have to eliminate underutilized assets, and the second one is boost sales efficiency, and the last one is reducing slow moving and excess inventory. For the account receivable turner on Luxchem Corporation Berhad, they must encourage early payments. And the second one is enhance digital invoice and follow-ups. The third one is enforcing strong credit monitoring. For the LNP Global Berhad, firstly, they have to offer multiple payment methods. And the second one is strengthen collection procedures. And lastly is segment customers based on payment behavior. For the next one is suggestion on how to improve profitability ratios. For profit margin on sale on Luxchem Corporation Berhad, they firstly have to invest in R&D for new chemical formulations. Second one is grow regional market presence, and the last one is to improve inventory and supply chain. For the LNP Global Berhad, they have to expand high margin product lines. Next, they have to reduce raw material costs, and lastly to introduce eco-friendly and sustainable products. For return on common shareholders' equity on Luxchem Corporation Berhad, they firstly have to implement better working capital management. Secondly, they have to optimize capital structure. And next one is increase profitability through high margin specialty chemicals. And for the LNP Global Berhad, they firstly have to increase automation to lower costs and strengthen inventory turnover. Lastly, they have to use moderate financial leverage carefully. Suggestion on how to improve leverage ratios. For the debt to asset ratio on Luxchem Corporation Berhad, firstly, they have to use slightly more debt to support growth projects. Secondly, they have to reinvest borrowed funds in productive assets. Thirdly, aim for a more balanced financing mix by reducing overdependence on equity. And for the LNP Global Berhad, they firstly have to monitor debt level closely, and the second one to ensure that debt is tied to profitable projects. And the last one is to improve cash flow management. For the debt to equity ratios on Luxchem Corporation Berhad, they firstly have to introduce moderate leverage, and the second one is to use debt strategically, and the third one is to optimize capital structure. For the debt to equity ratio on LNP Global Berhad, they firstly have to control future borrowing, and the second one is to reduce debt gradually, and lastly to ensure efficient use of borrowed funds.
In conclusion, Luxchem Corporation and LMP Global show significant differences in their financial performance. LMP Global excels in liquidity, meanwhile Luxchem displays stronger profitability and returns. However, both organizations possess the potential for growth by addressing identified gaps.